So, Art, are we at capitulation?
Well, I certainly think we're at a couple of peaks here, and I think we've got peak pessimism, and that certainly reflected itself in the UMich sentiment and the Conference Board Consumer Confidence, and certainly in the Bank of America's report earlier in the week, talking about positioning and pessimism in the market. So when you match that peak with what we likely are seeing in peak inflation, with a lot of inflation inputs having rolled over, we talked about energy in the last segment. We certainly have seen that in lumber, industrial metals, copper at an 18-month low, et cetera. All of that sort of plays into a positioning that, likely happens at a bottom, not at a top. So I think that you've got enough pessimism in this market and enough non-believers that you're actually going to have room for some upside. I think anyone that was going to sell has done a pretty good job of selling already. We've done an efficient job of taking multiples down significantly across the board, and the average stock in the Nasdaq is still down some 43%. The average stock in the S&P is still down some 35%. So I think you've got enough of the damage priced in for the bad news that might not come to fruition.
The bad news that might not come to fruition. You have a year-end target on the S&P 500 of 4,500. That feels pretty good. I mean, if we got it, how do we get there?
Well, first, Tyler, if we're going to retrace half of the move we've made from the peak to the trough in the S&P, that gets us back to 4,200. I think that's something we could eventually see heading into September. So that 50% retracement would make sense. But I think what we also see is earnings estimates for the second half, at least for the 15% of the S&P 500 companies that are reported, have not degraded at all. We really have, haven't budged much. We're still seeing the usual 65 or 68% of companies beat earnings and 65% beat revenues. Sample set's too small, and next week's going to be very important. But I think that if we have enough companies that beat top and bottom line and keep their guidance the same, we likely are going to see an expansion of multiple, and wouldn't be that far a trip up to 4,500.
Beating estimates is one thing. Growing profits is another. Are you worried that companies are going to have a harder time as we move into the fourth quarter and maybe 2023? Not just beating estimates, but really growing profits, because that's one of the main drivers of stocks and stock prices.
Yeah, for sure, that's going to be an issue. But if at the same time that the economy slows modestly, we're also going to see better inventory levels. We're going to see better supplies, better supply chain. We're going to see lowering of inflationary inputs. And I think all that plays into better margins. So just think about energy coming down and the amount that it has and how much that helps in all sorts of transportation issues for companies. So I just think that there's more good news than bad news out in front of us, and we've priced in plenty of bad news.